Okay, so over the next 20 minutes or so, I'm gonna show you guys the steps that I would take again to become profitable, right? This is not a secret strategy. This is not a magic video. It's the raw stuff of how you can become profitable by finding out the things I'm about to explain. Now, throughout the video, there's gonna be a random question. It's gonna pop up somewhere, and the first person to answer it in the comments is gonna get $100.
You're a good trader, you're just not trading the right way, right? And again, the biggest thing with me was over 2 years, I blew accounts. I did everything. I tried set and forget. I did Alex bootcamps. I did swag. I did this, ICT. Like, I did everything in the freaking book, and it seemed like nothing would ever work. Like, nothing would actually happen, right? And here's the thing. I was a profitable trader. I was just not doing the right box. The biggest analogy, right? Michael Jordan, superstar athlete, crazy guy, the biggest, the GOAT, whatever it is. In basketball, he's Michael freaking Jordan. But then you look at baseball, and he's a bum. He's a flop. But what happened? Michael Jordan is a superstar athlete. The thing is, Michael Jordan is a superstar athlete within basketball. Just like you might be a profitable trader with the right risk profile, with the right strategy, doing the right things. But here you are trying to force something that hasn't been working for months. But no, it has to work. I'm locked in. Like, yes, trading can work if you do it the right way. So instead of forcing yourself into something that doesn't fit you, understand, what is your cognitive profile? Are you more analytical? Are you more intuition based? What is your emotional profile? Are you somebody that's better with stability? Are you somebody that's better with intuition, with quick, with pace, right? And then understand, what is your trader profile? Are you somebody that has addictions and is more prone to tilting? Are you somebody that doesn't tilt but just doesn't get good results and are better with something slower, right? Look, how do you make decisions, right? When you wanted to buy a car, did you decide, oh, this dealership, the mileage, this, that, the model, or were you like, hey, this is a dope fucking car, let me buy this car? At least for me, when I got the car, I'm like, well, I like the M4. I do not care about the mileage. I do not care about the gallons per, the miles per gallon. I did not care about which dealership. I was like, you know, I want an M4. I want to make enough money for an M4. I did, and I was like, I don't care if it's this car. I just want a cool M4. I want a black M4. And that's what I did, right? So how you got to see it with trading is everybody can be a profitable trader with the right system. So people will tell you, oh, trading is not for everybody. Correct. Because not every style of trading is for everybody. Just because I use the book map and I use order flow doesn't mean that it's going to work for everybody that follows me, right? And everybody that uses my style. Maybe for them, it's better to be like, oh, a swing trading approach, oh, a full intradaying approach. But if you're using the wrong approach, if you're using the wrong style of trading for you, then maybe you should be doing that and you should be changing it. So next time, guys, if you want to quit trading, if you think your strategy is not working, assess your trader profile before. Assess your risk profile, your risk parameters, your tolerance. Because if you're not doing that beforehand, then you're just setting yourself up for failure because you're walking somewhere without knowing if it's going to be good. Imagine Michael Jordan, superstar athlete. Imagine if instead of playing basketball, he decided to play soccer. He would have been a failure of a soccer player, wouldn't he? He would have been terrible. Like, absolute disaster. And he would have said, I'm a terrible athlete. I'm not meant for sports. Maybe I should be a professional gambler, an accountant. But no, he knew that basketball was his forte. He knew that he could be better at basketball. He knew that his real skill was at basketball. Therefore, Michael Jordan was an NBA player, the greatest of all time. And that's what you guys need to understand. You need to put yourself in a position where you can perform, in a position where you can fucking shine. But most traders, they put themselves in a position where, hey, he made this work, so I'm going to do this. Let's say you're an amazing athlete, right? And I'm over here, you know what? I'm really good at swimming. I got to build back, whatever it is. I fucking suck at swimming, disclosure. And I'm like, you know what? I think I'm really good. I'm super athletic. Let me go and play lacrosse. And then I'm terrible at lacrosse. So I'm like, oh, I'm not a good athlete. But then if I went into a swimming pool, I'm over here being freaking Aquaman. And that's what you need to do as a trader. Hey, maybe support and resistance doesn't work for you. Maybe you want something more aggressive. Then learn how to trade the order flow. Learn how to do something that fits your style. But you're over here trying to force something and then you're going on tilt. You're going on tilt because either your risk profile is wrong or because the trading style you're using does not fit your emotional profile. Because if I guarantee you that if you have a profile, again, let's say you're going on tilt because you take one loss, you call it for the day, and then you go tilt, freaking wind, bro, it's exposing my hairline. But if you're doing all this, right, but then imagine if you were going low risk and taking multiple setups, then you're like, oh, well, I'm not gonna go on tilt because I'm going low risk and because I'm approaching it in a way where I feel at ease, where I don't feel the need to force something because I know I'm gonna have a higher trade frequency. But guess what? You don't want to try that and you want to force something to work. Guess what? It's not gonna work. not until you lock in and you figure out what your profiles are. So for this chapter 1, understand your trader profile, understand your risk profile, understand your cognitive and your emotional profile. Why? Because when you put all this together, you're gonna get the arena you need to succeed in. Wow, Warren Buffett, he's one of the greatest investors of all time because he understands his risk profile, his investment profile, and everything he needs to do. Imagine if I grabbed Warren Buffett and I told him, you know what, bro? You're gonna be a professional gambler and you're gonna play poker. Here you go. Well, he's gonna have to make quick decisions, fast-paced, not much data in the moment. He's probably not a good poker player, just like you're probably not a good trader with a strategy you're using because it does not fit your profile, okay? So your homework for this first chapter, figure out who you are, what type of trading fits you, what type of approach fits you, and then comment down below, hey, this is my profile, what strategy should I use? In the next chapter, so in like 5 seconds, 4 seconds, 3 seconds, you're gonna figure out exactly what strategies you should use and how to find a strategy that fits you. Because guys, with this video, by the end, I don't know how long it's gonna be, probably like 40 minutes. I need you guys to be profitable by the time you finish watching this. Chapter 2. Okay, so you figured out what type of trader you are, how you trade, your cognitive profile, emotional profile, and essentially what works best for you, right? You're now Michael Jordan of the Chicago Bulls. Congrats, you're not profitable. What we're gonna do now is you're gonna learn about the learning loop. Essentially, what you're gonna do is you're gonna learn something. Then you're gonna look at the data about what you learned, how you performed, and you're gonna get feedback. And you're gonna do this until you reach a point of effectiveness, a point where you're not broke anymore. Kind of cool, right? But how do you do this? So the first phase of the learning loop, you guessed it, you're a fucking genius. It is learning. How do we learn? Great question. We need to seek out information, and we need to seek out proper information. And again, the next chapter is going to be what I believe is the best way to seek out information. But here, you're going to seek out the information, and then you're going to test it. Welcome back to the freaking 7th grade. You're going to grab information, you're going to make a hypothesis, and you're going to test it, right? Let's say an example. If I trade this way and trade these confluences, then I will look for an expected value, and I will get an positive expected value because this has an edge over the market. And you're going to do this now. Then you're going to do the analysis of that data, and you're going to see, okay, from what I learned, right? I learned all this, I learned all that. What do I see? Was I good? Was I bad? Did it even fit my cognitive profile? Let's be honest, you're probably going to test a lot of stuff out before you find something that actually works for your cognitive profile. However, once you do, you're cash. So you're going to look at the feedback, you're going to look at the data, and you're going to be like, okay, well, this is the data, this is how it works. And you're going to give yourself feedback. Maybe I don't need to try this. Maybe I need to change that. And you're going to wiggle around until you find what worked best, right? And then continue doing this loop. And you're going to continue doing this loop even while you're profitable because the markets are always adapting. Therefore, so should your edge, and so should you. So it becomes pretty simple, right? You grab the learning loop, you start getting feedback to yourself from the information you're gathering. And then the thing is, you got to keep your mind open, right? You're going to find new information. You're going to find more information. The biggest thing I've seen with traders, which makes them remain unprofitable, is they're so freaking close-minded. For example, I'm gonna use this example because I freaking love the reactions I get to the example, but ICT traders versus order flow traders, right? They're profitable traders in both areas. They're unprofitable traders in both areas. Nothing is 100%, but here's the difference that I see. You grab an order flow trader and you tell them, hey, I know you trade this way, but there's this new tool that can help you spot liquidity from dark pools. Or hey, there's this new tool which helps you see how the market makers and options hedge in futures. The order flow trader, like the average order flow trader, there's some idiots as well, is gonna say, okay, that is a dope data set. Let me study it. Okay, I studied it, I see it. And then they're gonna say, okay, let me see how I can implement it if it favors my edge. That's what I usually see in the order flow scene. With myself, with my mentors, with other people I've seen there, right? It's okay, well, this is how we see liquidity from dark pools. Let me maybe use this tool or add this on, add it to this confluences, and you're done. Then you go to an ICT trader and you tell them, hey bro, I don't think Enigma runs the markets. Here's this piece of evidence and this piece of evidence that talks about how market mechanics work. No, you're a scammer, you're unprofitable, Sibao, oh my god bro, you're literally such a July, Jade Cap gotta pay out, Jade Cap gotta pay out, Jade Cap gotta pay. Like, we're not saying that it doesn't work. Andreas Simitan covered this very well. Do ICT concepts work? No, absolutely not. Now, are there strategies that are built around ICT concepts that work? Yes, why? Because a strategy I could get is trade head and shoulders. I know people that make money from trading head and shoulders. Does that mean that head and shoulders work? Does that mean that head and shoulders is how the markets move? And you got Warren Buffett looking at head and shoulders charts? No, because that's not how it really works. But it's still profitable, doesn't mean that's how the markets move. Same thing with ICT. Can people make ICT concepts profitable? Yes. Does that mean that an enigma moves the markets? And does that mean that at 9:50 every single day, it's gonna go liquidity sweep? That said, like, how are you even talking about liquidity when drawing lines on trading you, right? And ICT traders are gonna get mad at this, and they get mad at this because they're like, no, it is liquidity, London high, London low. They're like, no, dude, that's not how this works, and that's not how you should approach it. And again, having that closed mind, and I see it with other traders too, is gonna limit you so much, because in trading, the best traders, the best funds, their biggest expense is information. It's their quant analysts, it's their analysts, it's their research departments, it's all they pay for the Bloomberg terminals, for all the data. So if the biggest guys, their biggest concern is I need as much data as possible, then why are traders who have never even made $10,000, maybe not even gotten funded, defending something that they can't prove with hard data, right? If you can't prove something with data, or with if it can be actually proven, and it just goes like, oh, this guy said it, right? Like, again, historical artifacts, they prove that something happened, right? Just like data proves that something happened. So if you look at the data, you're like, okay, well, let me use a book map, and you see there's a liquidity level. That's hard data. That's undeniable. But maybe you have some traders like, oh, I drew this line at the London high. This is liquidity. Then you look at the order book. There's like 2 orders there. That's not real liquidity, right? So what you guys need to understand is, in order for this learning loop to work, this is where I'm wrapping everything up. Chill out. I'm not crashing out, low key. But if you have this learning loop, but you're closed-minded and you're not open to new ideas, new hypothesis, hey, maybe the way I've been thinking is wrong. When you tell a kid that Santa doesn't exist, he's like, shit, no, he does exist. Oh, wait, this makes sense now. However, when you tell an ICT trader that Enigma doesn't exist, no, it has to exist. There's no way it doesn't exist. Jade Cap got a bet. Like, bro, do yourself a favor and understand how it actually works, how it moves. Can ICT concepts make you money? Yes. But it's the open mind that's going to tell you, hey, maybe I use ICT concepts, and maybe I use bookmap to see where liquidity is. That way I can use my liquidity sweeps with more accuracy. Maybe I use my ICT and confirm my fair value gaps with high volume events. That way I know if there's actual institutional backing behind the move. Wow, then the whole universe is much bigger now, isn't it? Because you're opening your mind to more data, and you're opening yourself up to receiving more information that can add to your edge. So that's how the learning loop goes. And now we're gonna talk about how you can find high quality information, and then how to actually make that information profitable, because you can have an amazing strategy but not be profitable. So let's cover that. You know the learning loop, congrats, right? Now we need to understand how we're gonna grab data. And again, at least my opinion in trading is you should always pursue the truth. And the truth is gonna come from data, right? The markets move based on data, the markets move based on orders. Therefore, we're gonna look at the real data and how this actually moves. So first thing we need to understand is, where does the market data come from, right? How can we understand how the market moves? Well, it's simple, right? We understand that the markets move based on orders. And if we look at the top guys, the guys that are running the show, they trade orders and they trade data. They don't trade secret algos, they don't trade whatever. And this is where most traders go wrong, right? There's concepts and there's strategies. Strategies work, right? Like, again, my strategy could be head and shoulders pattern. Whenever I see that, I'll take a trade. And I might be profitable. Does that mean that the market moves based on head and shoulders? No. Does that mean that the market works because of a certain pattern, and whenever that pattern happens, everybody freezes and they trade just that pattern? No. Same thing with ICT concepts, right? There's tons of guys that make ICT concepts profitable, right? Guys like JCat, guys like Kane, guys like Jesse, right? There's a lot of people making good money from ICT, but that doesn't mean that the concepts are true. They're simply trading a pattern that has an edge on the market. It does not mean that the markets move because of Enigma or because of a certain algo, right? Same thing with supply and demand. That's not how the markets actually move, or basic supply and demand. Order flow, supply and demand is a different thing. So how the market moves, right, is we have real liquidity. Liquidity means passive orders waiting to get hit, right? But that might be in the form of stops. It might be in the form of limits, right? So your job is to start discovering this data, how the market moves. And once you get this, then you'll understand how it works, right? Again, ask your favorite traders, right? They might have a strategy that is based off concepts. Concepts don't exist until the market works this way or it doesn't, right? And there's tons of information available online. For example, we know that 50% on average of the NQ volume is made by options dealer hedging and options market maker hedging. So if you don't understand that yet, go research that, right? Because that's 50% of the volume from the asset that you trade. Hey, there's a lot of big orders that come in, and the major players, they use iceberg orders. So go understand how iceberg orders work, right? And why they're so important to the market. Liquidity dark pools, what are they? How do they work? Go research that. Gown exposure, how does it work? Go research that, right? So your job, now that you understand what the learning loop is and how the learning cycle works, is to get the best quality of information possible. And now I'm gonna talk, after this, I'm gonna talk about how you put it together. But essentially, just understand, do your research, and go down to the truth, right? Elon Musk talks about thinking first principle in his book. And it's very true. Why does this work this way? Why does this work that way, right? When they were making the Ferrari, hey, let's put a V6. Why a V6, not a V8? Hey, okay, actually the V8 is better. Hey, why a V8 and not a V12? Oh, the V12 wouldn't fit. Why? Because of this. Why? Because of that. Okay. So just thinking why, okay, the market is looking for liquidity. Well, liquidity is everywhere. It's not just at the highs, at the lows. Why? Because orders are coming all the time. Okay, so where is the best liquidity? Well, there are the most orders. Why? Because it's going to give us the best reaction. And that's how you're going to find how the market works. Understand market mechanics. I'm not telling you guys I'm a master, by no means possible. I'm simply telling you, the more research you do on the truth and how it actually works, the closer you're going to get to it, and the more understanding you're going to have in the markets as a whole, which is going to give you a better edge. Whether you can apply this edge profitably or not, that's up to you, right? So start doing your research accordingly and start looking for people putting out good education. I'm not here to say I'm the best education about the market, but I try to make my videos as best as possible to educate you guys on these topics. There's amazing guys out there, right? We have Carmen Rosato, Scott Pulcini, Andrea Cimitana, Fabio Bernale. Like, there's some really good guys out there who are not getting the recognition they deserve because they're putting out the best information, but it's not sexy. The markets are not sexy, attractive. It's not, oh, this strategy will make you $500 every day, because those are the guys that are trading stupid stuff. And again, correlation does not mean causation, right? Again, if something blows up and I eat an ice cream at the same time, does that mean that every time I eat an ice cream, something's gonna blow up? No, just because market went down after you saw an IFEG, doesn't mean that the IFEG sent the market down because there were relatively equal lows. That has nothing to do with how the markets work. So just understand that. And again, ask yourself some stuff. There's a lot of guys who I've seen, they use ICT and they learn order flow and they become killers. Like I said, dude, one of the guys I was talking to recently, he was able to make $70,000 in a week. He was a good ICT trader. He added the order flow, used Bookmap liquidity, and is freaking crushing it. So you have the learning loop. Now your job is to go out and seek data. Nobody's gonna hold your hand. Nobody's gonna feed it to you, right? You can't pay, again, I paid $15K for a mentorship, which taught me a lot about how the market mechanics actually work. It was from a professional Wall Street trader. And it was extremely worth it, right? But still, I had to do my own stuff. I had to do my own research. I had to do my own understanding. I had to use my own thoughts, my own brain to make something work. No free lunch in life, right? So guys, your job is gonna be to find this information and then put it into an edge. But how do we build an edge, right? First of all, we need to understand that an edge is something that's going to play out over the long run, something that's going to give us a statistical advantage, right? So what you want to do is you want to gather concepts, right? And you want to, like, actual concepts, or so you want to grab a set of confluences. In my case, it is a gamma level along with actual liquidity, along with icebergs and a high volume event, aligned with structure and current candle expansion. Pretty straightforward, right? It's nothing super crazy. And then I know that over the long run, whenever I get a certain high volume event at a gamma level, at the corresponding level, where if I get a negative event at the put support, it doesn't make sense. But if I get a bullish iceberg event at a put support level, and we are looking to expand to the upside, then we can start looking for a trade, right? I'm not saying it's perfect. My personal win rate year to date is around 65% with a good RR. But that's what's gonna help you build your edge. So find your confluences. What do you understand better, right? And again, go back to chapter 1, your trader profile. What fits you better? Build it around that. And then on the next one, right, on the next chapter, guys, I'm gonna tell you about how you can find the data to your confluences, how you can find if your edge works or not, and then using that data to leverage it, right? So I hope this kind of helped you understand, guys. Do some research, hate me or not, I don't care. I'm just here to tell you guys what I understand of trading and how the markets actually work. I'm not here to tell you it doesn't work. Yes, it can work. Your concepts can work. It doesn't mean they're true. Again, just because I ate an ice cream and something blows up doesn't mean every time I eat an ice cream is going to blow up. I just want to help you guys open your mind, open your eyes, because the more information you guys have about the markets, the better you're going to become. Let's hop into the next chapter on how to know if your edge works, what data points to grab, and how to leverage that. So now that you have your edge, you have your confluences, first we need to test it, right? And what you're going to do is you're going to paper trade. It sucks, it's slow, but it's the only way to figure out if the data itself, the edge itself, is profitable without your emotions, right? Then once we're live, we can talk about management, emotions, and everything that goes into it. So you're gonna grab your accounts, you're gonna grab a paper trading account, you're gonna take 20 trades, and you're gonna journal them. And from those 20 trades, there's a single metric that you need to track, right? Expected value. If after those 20 trades, your expected value is positive in terms of R, you have two things to do. Number one is see if it is, again, positive or negative, but more important to see if it's between 0 and 1 or above 1. If it is between 0 and 1, my personal recommendation will be to find out what you can tweak in the strategy, right? Maybe higher RR, see how you can extend profits, maybe see how you can scale in, just to maximize that. And if it is above a 1, then you're profitable. So that's dope, right? You got it set, you're locked in. What you're gonna do now is you're gonna grab a smaller account, right? Again, this is once you have your edge dialed in. And again, this is only if the expected value is above a 1. And you're gonna trade it, again, at least with Profit's account, what I did at first was I'm gonna be risking 1%, and I'm just gonna trade the math, right? Again, depends if the drawdown is 3%, then you need some luck, right? If you really wanna test out your edge, risk 0.5% on an account that has like what, 4% of drawdown. That way you can lose 1, 2, 3, 4, 5, 7, 8 trades in a row. So that's super simple, right? But again, you need the data and you need to be able to gather this, right? And then as you trade, you're gonna keep tracking your expected value. You're gonna do month by month comparisons, right? So let's say February, my expected value was 2.5. March, my expected value was 2.2. Okay, it's good, it's still in the ballpark. Then April, my expected value was 1.1. So then, whoa, what's happening in April that is bringing down our expected value so much, right? Like, what's going on? Now, it's going to be very normal that in your first market cycle, right, your first 6 to 8 months, you're going to have spikes, you're going to have drops, and then you're going to get the average out, right? But your job is to see that when it drops, what happens? Was there a change in gamma exposure? Was the volatility weird? Were you taking different trades? Were you tightening your stops? What was going on? And then you're going to grab that data, and whenever we get, again, this is after a couple months, whenever we get to seasons or weeks with lower expected value, you're going to lower your risk, and you're going to be like, okay, when there is FOMC week, my expected value is worse, so I'm going to lower my risk. Hey, whenever we have CPI week or NFP week, my expected value soars through the roof. Then you're going to risk more, and you're going to gather your expected value by time of day, right? When are you more profitable? Between 9:30 and 10, 10 and 10:30, 10:30 and 11. Are you more profitable? Is your expected value greater when you're trading with higher size, with lower size? So you're going to just grab these details and grab these data points, and you need to analyze them. Because if you're able to do this over a 6, 7, 8 month period, you're going to have so much data that you're going to know exactly how much you should risk based on the time of day, on the contract size, on the gamma exposure, right? And that's why it's so important to actually just gather more and more, which will give you better data points. And actually, we're going to bring somebody into the video because this man is really smart about data. So, successful entrepreneur. We got a special guest in the movie, bro. So I'm making a movie, right? It's gonna be like a 1-hour movie about how to become a profitable trader. So you've made money day trading, and we're talking about the importance of understanding your strategy long term.
Oh, sure.
What do you have to people who don't have a profitable strategy? What would you tell them?
Well, do you want
Either course.
you want the sarcastic answer, or you want the real answer?
Both.
Okay. Let's start sarcastic first. I fucked up a lot of fucking things when I was like trading, so I'm not the best person to learn from. However, this guy can definitely. It's not sarcastic, actually.
Okay, but you understand business and trading.
Right.
What's okay? This episode we're talking about the importance of gathering data to improve.
Oh yeah, that's crucial. That's like.
So what would you recommend to somebody who doesn't know what to gather and how to improve?
I think they need to. What do I recommend?
Yeah.
Damn, bro, it's just like it just hit me right now. Holy fuck.
7-figure entrepreneur, by the way.
This is crazy. I mean, the thing is, fuck. I'm blanking out right now. Holy fuck! I don't even know what to say to the
Okay,
camera.
so if you had to start a business, right?
Right.
Let's say they have to start one of your companies again.
Right.
Let's say the software company, right? We're not going to go into details, but
Right.
what data points would you gather to scale quicker?
Oh, dude, everything. I mean, dude, employees, like hiring, like everything. You need to track everything. Like that's
Every input, right?
every single one of them. It's
And then what do you do when you're tracking something and it's lagging behind? Like you find that something's not working. What do you do with it? Do you try to make it work or do you pivot?
no, that it just depends on how much data I have. If I tried enough or not.
Like
you
6
know.
months of data every single
Oh,
day.
dude, no, of course you need to pivot. I mean, there's something.
Then some people will remain unprofitable for a year and they try to make the strategy work, right, guys? Gather your data and see what works and what doesn't.
Yeah, I agree. This is the man. I'm blanking out. I don't even know what to say.
But yeah, guys, again, so going back to the main topic is gather that data for 6 to 8 months and make it work. Now, in the next episode, I'm going to talk about how, well, the next chapter, not freaking episode, but we're going to talk about how exactly you can use the expected value of the edge to calculate your risk profile. And after you get your risk profile, we're going to get to scaling. See you in the next part.
Now, those were the first 4 chapters, okay? Cool. If you want to watch the last 2 on how to make your risk profile and how to scale, click the link below and you'll be able to see the full training for free. I'm not going to charge you guys anything on just how to finish this out and make sure you get to that profitability. I appreciate you guys watching this video. Make sure to like, subscribe, and tell your mom that a new video dropped.